Hey guys, how are you? Gonna do the trade review for today. How's it going? So I had a couple trades today and I was trying something a little different, generally using the 5 minute time frame as my guide and not paying as much attention to those short-term time frames. And we'll go over what happened exactly. I had a few trades here. I had a couple of trades on Apple, a couple of trades on SPY, a couple of signals I missed looking back on them. And so we'll go over what exactly happened here. So let me get rid of all these lines on the chart. This is Apple. And we moved down first thing to test the low of yesterday, which was around 328.40. And we moved in and I got in. Let's take a look here. So I moved over my broker platform to my smaller monitor here and I made a compact execution layout. And I'll show that to you real quick if you want. It's basically looks something like this. And I use that on my other monitor now because I'd prefer to use TradingView on my main monitor here because I just love the charts much better and I find I trade better with these charts in front of me. So that's just the choice I'm making. Originally I had Trader Workstation as on my big monitor here, so now I've got it on the small monitor. So we'll take a look at what I did here. I had a few trades. I had 3 trades total, I believe. Apple 280 calls, SPY 210 puts, and Apple 210 puts. 2 winners and a loser. And I'm about break even on the day here. So we'll take a look at what happened exactly. So my first trade of the day was at 10.05 on Apple. I got into the 210 calls and you can see here we bottomed. This is the 5-minute chart, 10.05, 10.10. I got in at 10.05. So as soon as we were seeing this type of bullish momentum here, if we zoom in and look at what happened at 10.05, this is the 2-minute chart. You can see pretty bullish and then we consolidated sideways for a while. And then we saw more bull action after that. I stopped out early on this trade. I got rid of the last part of the position at 10.21. So if you look at 10.21, you can see Apple came down and we were in sort of this tightening range and we basically broke the low of this candle by like 1 tick or 2 ticks. And that 1 tick was enough for me to stop out the rest of the position at break even. In hindsight, I missed this entire move up. Pretty crazy. So definitely got to be aware of that stuff. I was actually watching the 1-minute close. Definitely next time I'm going to be watching that closer. I'm going to be watching that 1-minute close because look, you came up here, tried to test the high, failed, then tried to move lower and failed. And again, this is bullish consolidation. A lot of people trying to short this got trapped like me yesterday. So generally these counter trend trades, they look really good. Like this really looked good in hindsight. You can see try to move higher, fail, try to move higher, fail, but break the low by 1 tick and then get rejected. So that right there, I guarantee you some shorts tried to short here and then got killed after that. I got rid of my position there for break even, the rest of my position. And when in hindsight, if I would have just kept it and just stayed looking at the 5-minute time frame, I would have caught this whole move practically. So we learned for next time. So that was the first trade on Apple. The next trade was at 10.39, 10.45 on the SPY. And this trade was bad because, like I was just telling you, it was a counter trend trade and it failed. So 10.39 on the SPY, that was approximately right around in this bar right here, in this bar. So I was expecting the SPY to kind of fail here. So I decided to take a short. Now, what exactly happened was, you can see again, we broke to a lower low, no follow through, straight into the bull break, chop around, and then bull break. So generally I was entering with a stop above 245, but I was shorting it down here near the lows. So again, bad risk to reward and not a high probability trade, especially since we're coming off the lows here. So this 5-minute time frame, 10.39, you can see that was the 5-minute close we got, generally pretty bearish. So we're watching what's going to happen next time. So you have to just watch what the market's going to do around the exponential moving averages. And you can see on that 1-minute time frame, it lost it. What about the 2-minute? Yeah, it held it on the 2-minute. So I should have just been keeping my eye on the 2-minute exponential moving averages. And just looking at these 2-minute candle closes, you can see how strong the bulls and bears are just by watching how the price reacts around the exponential moving average. So again, I took a bad trade there, counter trend, and I got stopped out. As it broke 245, I just got out with a market order, and that was it. Okay, so that was a losing trade. That put me red on the day. Now, after that, there was one more trade on Apple, and we'll go over that. So this is what I was looking at, actually. So I decided to draw a trend line from the high of the open until the current high of day. And that's sort of the trend line I ended up with. And I was watching how we pulled back here, this 5-minute pullback. I didn't take this buy signal. I don't know why. Actually, there were a lot of signals I did not take today, and I'm going to be going over them after I finish this video and later this evening. But the 5-minute time frame gave some really good signals today. So yeah, so look at this one right here. So after we got above this sort of trend line that I drew, now nowhere in this video am I saying that trend lines are accurate. I don't personally like trend lines that much, but I just found this one kind of interesting because I've been reading an Al Brooks book. He's a price action expert, and he talks about one thing called a trend line overshoot. Now look at how the market overshot the trend line there, and we'll look at the 1 minute or 2 minute just to see exactly what happened. So this is the one. You can see market overshot the trend line, and we're doing this type of thing where we break to a higher high, fail, break to a higher high, and fail again. So we had 3 highs, or 2 times that it tried to break higher and failed. So usually when the market tries to do something twice and fails, probably tries to go the opposite direction. So I took a short right there, and I got in the Apple 210 puts at 12.12. Sorry, at 12.22, and I paid $92 per contract. Actually, it was the market was having trouble giving me a fill on that one here on this bear break. So what exactly happened was the market broke bearish. We came up, tested this breakout point, and then moved bearish for a real move. Okay. Now, if we look at the close we got on the 5-minute time frame, you can see the first close there is generally bearish. So that was partly why I was comfortable going bearish at this point. And I think I was looking to short below 255. That was the general area. I was watching 255, and the bulls rolled below 255 pretty easily. The bears, I mean. So I was in at 12.22. I took off the first contract at 12.30. So I would have been in on this candle here, breaking below 255, filled with a market order, an adaptive market order, which means it's not an order that says I will pay anything to get into this trade. It's an order that scans available prices that the market exchanges are offering, and it tries to fill in between the spread so you don't pay a huge commission. Thanks to Interactive Brokers, good order style. So as you can see there, after the market failed twice at the highs, we got this rollover, and that was the end of the show pretty much. We came up, and at this point, since we lost that 1 minute uptrend, we are now consolidating on the 5-minute time frame, looking for a higher low at that point. So I just pretty much kept the trade until these moving averages. So you can see that we rolled over quite a lot there. So I took off half at 12.30, which would have been on this candle, where we were kind of in between the moving averages, and I took off the other one at 12.39. So let's see here. Right there. So as we broke below the moving averages, I was out of that. Okay. And yeah, I mean, in hindsight, maybe I could have got a bit more out of it, but generally that was the trade I was looking for. That was my profit target, and I took it, and that was it. So that put me back above break even on the day. So I'm slightly green, but barely. Okay, so those were my trades for the day. So let's just briefly go over other signals that took place. So first of all, 5-minute time frame. Let's just focus on the 5-minute time frame here. So you can see here down at the lows, this was a first signal long to take based on the low of the day. Didn't take it. I got in a little after that, 10-12 or something. Yeah. Okay, then after that, this was a crucial candle. It was a crucial close, and I stopped out the rest of my position there, and I didn't realize how much upside there actually was in this trade based on where we were in the market. A lot of upside potential there. And I stopped out basically right there at the low of that tick. And my trade was break even at that point. You live and you learn. Okay, so those are the entries. Now at this point, 5-minute time frame just ripped all the way up. There was no point during this that the market was signaling a pullback of any kind. So maybe here, saw those 2 upper wicks, a bit of rejection, but still no red flags, because at that point, let's see here, 10:35. At that point, we're just consolidating in a similar fashion. You see move higher, consolidate, and then that's it. And we're holding the 2-minute exponential moving averages, and that's really what we're focused on here, or what I should have been focused on, better yet. Yeah, look at that. 2 perfect holds right there. And a lot of the time it's the first entry. See, we come up, consolidate, and it's the first entry long you get off the moving average. That was it, you know. Then it was just all bulls, little mini pullback, and then all bulls all the way. Overshoot the trend line. We had a 5-minute pullback here, where we met up with the 5-minute exponential moving average, got another bull entry off the 5-minute. I didn't take that one either because I thought the most likely scenario was going to be a lower high. But even if it was, there was still some profit potential in that trade. You see, I could have entered long right on this bar, anywhere in this bar, on the close of this bar, 251, and I would have been risking down to 250, just under 250. Bulls came in, a lot of profit potential there, and then that was the short trade off the high of the day. Now, in fact, that was a counter trend trade, but I think it worked better simply because of the fact that we were overextended, and that's it, you know? Prior to that, counter trend trades were not recommended, but up here, counter trend trade has a higher probability of working. Yep, okay, let's keep going. Any other signals here? So there's a little bit of a long signal there, but it was a fake out, as you can see. So that was a short signal, you see? Big green bar. And then an upper wick closing below the moving average, a red bar closing below the moving average of that bar. So if there was a bearish signal there, you could have taken a short off of that, risking above these highs. But again, we're going into like 1 o'clock area here. So that's like the, they call that the barbed wire, where it's just chopping around. Okay, now this is interesting. So you can see these lows here. Take a look at these lows. 248.67 was our last 5-minute higher low. We came up from there. This is a long entry, a pullback, and then that was the trend change on the 2-minute time frame. Let's see what happened after that. We came up, topped out at this resistance right here, which would have been 254 approximately. Now watch this right here. So we chopped around 254 with these upper wicks for a solid 25, almost 30 minutes here. And then the market finally tried to break above it. It broke above it, but look how long it lasted after that. And you can see it got a failure, tried again very briefly, and then failed the second time. And that was the short. That was a short signal that I was watching that I didn't take, in fact. But if I would have taken it, let's take a look at where I would have taken it. So again, here we go. Okay, break above 254. Clear break, but we're getting upper wicks here. So that's why I wasn't convinced to take a long trade here just because I didn't like it so much. I was waiting. I would have preferred to wait for the failure. So we got this pullback down to the 2-minute exponential. Double top, chopped around 4 bars in a row here. 1, 2, 3, 4. Broke below that range, and then that was it after. That was all bears. The bears took control all the way down into 250.50, got a little retrace, and then the bears pulled back all the way down to the VWAP, and then that was into the close. So there was another short trade right there that I missed. So I missed some signals today, but I'm going over them right now with you guys. So maybe you can catch them tomorrow if there are some. All right, guys. Well, that's my trade review for today. So I wish you the best and keep the risk managed. Take care. Bye.